Late edition, but this is going to be another video episode of the Trading Coach podcast. So you're fine listening on audio as usual, but if you want the full experience, make sure you go to a place where you can see the video version. I know Spotify does it as far as podcasters goes, and of course I upload these to YouTube as well. All right, let's hop in. Have you ever been watching the markets during a high impact news event and the numbers come out exactly as you expected, but then price moves in the opposite direction? Yeah, kind of sucks, right? In this video, I'm going to explain why that happens and more importantly, what you can do to prepare yourself ahead of time so that you don't get caught up in those types of moves. Now, the footage that you're about to see comes from one of our Tier 1 Trading live trading rooms. We had just started the session right after the Bank of England interest rate decision, and there were a lot of questions that came up, asking how come this happened but market did that? So we'll talk about that, and I also share some simple resources that I personally use to stay on top of news events and an easy step that you can take if you're someone looking to educate yourself on the fundamental side of things. Let's hop in. We had something very interesting happen in the market today, and I put it on the chat, and this is why I always warn you about fundamentals. Going back to the basics of economics, right? We had an interest, let's start here. Going back to the very basics of economics. Higher interest rates should mean strength or weakness for a currency. What would you guys say? If an interest rate is higher, that should equal strength or weakness for a currency. What do you guys think? Should equal strength. If an interest rate goes lower, should it equal strength or weakness for a currency? If an interest rate goes lower, strength or weakness for a currency, right? So in general, interest rates go up, currency should get stronger. Interest rates go down, currency should get weaker. So we had an interest rate cut today, 4 to 3 3/4, which is a cut. Therefore, we should see weakness in the currency. However, the reaction to the interest rate cut was a strong currency. Doesn't make any sense, right? This is every time I speak to Jason about this, we laugh and joke because there used to be this massive debate whether you had to be either a technical analyst or you had to be fundamentals, and the fundamental people would hate the technical people and the technical people would hate the fundamental people, and this big argument of who can predict what better. It's technicals don't actually tell you something and blah, 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 because fundamentals move it. And we're you can't make consistent decisions off of fundamentals because the actual news event doesn't really mean anything. And this is a perfect example of the wackiness that can happen during those periods of time. And how traders can drive themselves insane, because no doubt as I check my messages later, I'm going to get 100 messages asking how come we saw a cut, but the interest where the currency gained strength. Now, pop quiz, I don't know how up to date you guys are or how many of you guys actually care. Does anyone know why we actually are seeing strength in the pound despite an interest rate cut? Anybody know or anybody have any ideas on why? Nope. Well, let me ask you this. What is the market, right? The old saying, buy the rumor, sell the news, right? What does the market care about? Does it care more about the now or something else? Nope. Wasn't less than expected. It was as expected. Nothing to do about being against the dollar. Nope. These are good thoughts, though. The market cares about the future. So when looking at this interest rate decision and all the associated stuff with it, the market already priced in the interest rate cut from a very, very long time ago, right? It's been priced in for a while because we knew it was happening. The information that the market was looking for was, what do we think is going to happen next? And pretty much the market was considering the idea that the Bank of England was going to do back-to-back cuts, meaning a cut here in December and then another cut at some point during Q1 2026. I don't actually know when the next time would be, but at some point during there. So that was what was on the board. It had nothing to do with today's cut. That was known. It was going to happen. The toothpaste was out of the tube on that one. But the idea of, are we going to have a cut next time as well? Or how many cuts are we going to have in 2026? That's what the market was paying attention to. And what happened was today, there was pretty much a reassessment of 2026, where the general consensus was, hey, there's a good chance we can have back-to-back cuts. Today, it came out, and let's just say the market is now thinking that that is less likely. Does that make sense, guys? Ozzy, could you explain more in detail, please, and where did you get the idea that people are hoping for two cuts? So, going back to the general theory that I'll do two boxes here, right? Interest rate hike, right? Strong interest rate should equal bullish movement for currency. And lower interest rate, and this is economics 101, guys, right? How it's supposed to be, right? Weak interest rates, should equal weakness for currency, right? So I think we all said we understand this, right? So we'll go step by step. So just make sure if you, and when I say it, if you don't understand it, let me know, right? So strong interest rate should be positive for currency. Weak interest rate should be negative for currency, right? It's the same thing like if you were shopping to put your money in a certificate of deposit or a money market account, where the ones that have the higher interest rate, you're like, yeah, let me put money in there because I'm going to get more bang for my buck. The ones that have the lower interest rate, you're not going to do it so much, right? So in general, this is what the market looks like. So if the idea is that we are going to, this is December, right? If the idea is that we are going to see another cut in the next interest rate decision, is that bullish or bearish for the currency? So this is now, that's not now, that's a bear, I'm sorry. This is now, and this is next, which again now is really wrecking my mind of where the next one is, right? So bearish. So this is what the market anticipated. The market already had passed this now, and the market is focused on the next. So does this make sense why the market was banking on pound weakness? Because of anticipation that they're going to cut again in 2026 at the first available time. So this is why the market is betting on weakness. So the market has made up its mind that it is going to position itself for weakness on the pound because of what's happening next. So the market has positioned itself for weakness. Now, all of a sudden, remember, interest rates are going from, the anticipation is that they're going from here to there. So we're going down this slope. Now, all of a sudden, the news comes out and says, hey, you know what? Although we were pretty much banking on another cut right away, based on the economics that came out, that may not be the case. We still might do it, or we might just hold steady at where we're currently at now. Do you see what happens here? Now all of a sudden there's that readjustment where it's like, well, wait a minute. We were expecting this fall. Now there's kind of like, well, that may not happen. That is a positive news for the currency. It's kind of like strength by default. It's what's a really good example. I'm trying to think of well, Wolves almost did it. Imagine like, right? So I never admit that I believe in moral victories in sports. Like I'm always like, I have this mindset, and it's a similar mindset to the greats, right? Not saying that I was a great, but my mindset is like, you should go out there, like I'm going to win every game. Like you can line me up at the starting line against Usain Bolt, and I'm going to beat him in a race. Like that is my overconfident male athlete mindset. But watching my kids play soccer and being an Everton fan for so many years, I have now gained value in the moral victory. So imagine this was a game the other day. Wolves had played. Who did Wolves play? Wolves played. Gosh, was it? Who someone remind me. I'm having all types of brain farts. Where's my thought? Who did Wolves play, Amon? They ended up. It was a brilliant game. They ended up tying. What was it? It wasn't Liverpool. Gosh, it was. I'm going to go back and look for it. No, they did lose to Arsenal. All right. Why did I think it was Wolves? Anyway, imagine a really bad team playing a really good team. Maybe it was a couple weeks ago. And they're supposed to get blown out by this good team. They're supposed to lose dramatically, and they're losing in the game. Then all of a sudden, they bring it back to a tie, and they end the game tied, and they call it stealing a point. Well, a tie is not a win. But when the expectation was that you're going to lose, if you can pull off a tie, that's looked at as a positive result. So this is kind of the same thing where if you're expecting a loss and then news comes out and you're like, hey, we get a tie, we get a point, that's actually a positive feeling for the market. So this is why the market is reacting strong, even though there's actually no positive news coming out. It's the lack of negative news. By negative, I'm not saying good or bad, but negative as far as like interest rates going negative. Yeah, performing better than the expectation, even if you still didn't win the game. So Alice says, yes, makes more sense. But where do people get the expectation, and where do you hear that people are expecting to have a second cut? You got to read the news. Yep. That comes from reading the news, right? Remember, I said the other day, two things if you're going to be a fundamental trader, if you want to learn about fundamentals. It's actually a good podcast a long time ago about learning about fundamentals. But the easiest way to learn about the fundamentals, and this goes for one, what's happening in the market, but two, what's actually affecting the market, is to make the daily habit of paying attention. So yesterday we mentioned, like, if you want to know if a news event is important or not, right? Watch the markets as that news event comes out. The markets will show you if the market values it or not, right? If the markets move, it was valued. If it doesn't move, it was not valued. And then when you consistently track that, you can kind of get an idea for like, CPI, that always tends to move the market. Maybe this is a high impact news event I want to avoid, or, Philly Fed's coming out. Market never moves off of that. Who cares? I can trade right through it. So that's one way to do it. A way to stay up to date on what's happening in the market is just read. Make the habit of reading 1-2 articles a day. Go to your favorite news source. Many of them are under a paywall now, but you don't have to pay for them. Go to different places and just read on what's happening. And when you read, it will tell you what the market is expecting, right? It will tell you that traders are expecting this, that, when this FOMC member came out and spoke the other day, they hinted at that. And if you pay attention, right, they will literally tell you kind of where the market is at as far as its expectations. There's, in certain cases, as far as like interest rates specifically go, there's even like this scale where it will tell you like the market is 63% convinced that this will happen. There's also a fear and greed index, which is pretty cool. I don't have a practical use for that, but I just think it's cool because it's an index that tells you fear or greed in the market. I'll bring it up for you guys. It's just cool. But yeah, you just pay attention, make a habit of reading, and you'll know. Like, let me see if I can find an article real quick. Investing Live is a place I go to. Give me a second. See if I can find something. All right. Let's see what this says. The Bank of England delivered the expected. The Bank of England delivered the expected Christmas cut, but the market reaction is anything but dovish. While the bank rate dropped to 3.75 from 4%, the pound is higher, driven, and ECB is coming out right now, driven by a deeply divided MPC and guidance that suggests the Bank of England is nearing the bottom. Cable, pound dollar, jumped roughly 35 pips during the release, trading from 133.94. Then fading to 133.75 level. The 5-4 vote split wasn't a surprise, but Governor Bailey comments that further easing, here we go, Governor Bailey's comments that further easing will be a closer call, right? That's the thing. All this other stuff is, whatever, junk. Governor Bailey's comments that further easing will be a closer call leaves the market pricing in about one and a half cuts next year. In the fixed income space, the front end of the curve moved on the release, blah, 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 blah. Here we go. As the hawkish tone of the statement forced a repricing for the 2026 path, the market had been flirting with the idea of back-to-back cuts in Q1. However, the Bank of England warning of a December inflation hump and more limited space for cuts, those bets are being scaled back. Previously, a cut was fully priced in for April, maybe that's the date then, but now that's been pushed back to the June 18th meeting. So stuff like that right there. What website or app do you use for news? I go to Investing Live and I go to investing.com. Those are the two main resources I go to, and they kind of take places from everyone. There's another one if you want even more news. Well, I'll give you one more. So Investing Live, investinglive.com. I'll write these down. Investinglive.com. This used to be forexlive.com if you're familiar. And then investing.com. Those are my main two I go to. If I'm looking for something specific, meaning like those are the two websites I go to if I just want like a general browse and peruse to start my day. Right? So I just want to read a couple articles, see what's going on, blah, 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 blah. If I'm doing research on something specific, I go to this magical site called this. Wait for it. Google, I don't know if you guys ever heard of it, .com/news. I know it sounds weird, guys, right? But I had a fundamental trader, a very respected fundamental trader in this space. He's the same one that told me that he never advises any trader to actually be a fundamental trader, by the way, which is interesting despite him being a fundamental trader. And he broke down this secret for me, and he was like, yeah, people have all these different weird news sources. He's like, but what's the best search engine out there? I'm like, Google? He's like, yeah, just go to google.com/news and search it. And it blew my mind because back then I was younger and I was under the impression that you had to pay like millions of dollars for these sources. Another one is I don't use this anymore, finviz.com. I think it still exists. If you want everything, let me see if it still exists, finviz.com. If you want everything, including blog posts, which are really good sometimes. Finviz.com. One, looks super cool on your desktop, makes it look like you're doing something as a trader. Look at all this cool stuff. Go to news right here after the ad passes, and you can see you have two columns. News, right? Pick and choose your headline. There are millions of things to pick from. Or blog post over here, which are hit or miss. Like this is Seeking Alpha. I actually like Seeking Alpha. That's what I used when I was an investor. Zero Hedge is a good one. Whatever your fancy is. So those are a few options right there. If you want to look like a trading guru, go to FinViz. When your friends come over, click this thing that says maps. Brings up this bad boy, and you can start saying stuff. Oh, looks like the stock market's down today. Red Thursday, right? You can, makes you look like a. Remember, I did the episode yesterday, Trading Coach Podcast, about monitor screens. Yeah, the part I left out, I said 4 is my ideal setup. I have a 5th monitor, right? It just has FinViz on there. It's just only when friends come over. I only put it up when friends come over, and I just leave this on here. It has no purpose. but it blinks and stuff, and people think I'm fancy. That's what the fifth monitor is for. It's all for show. Good discussion. We have a pattern forming here as well, by the way, which I just want to get on the board really, really quickly because we're approaching it. I promise we'll finish up on the fundamental questions, but real quick, just so we don't get too distracted, and by we I mean myself as well, because I'm waiting for this one. We have a swing high to swing low, X to A to B is hitting the 618, which means we're on alert for what type of pattern, guys? I'll get this into our pro trade log. Yep, we've got a Gartley setting up. We are 15 minutes past the news release, way past 15 minutes. So this is a valid setup. X to A to B, B to C. C to D at this 127 zone from the 127 to the X leg. Looking for shorts here on the pound dollar. Let me get this into our pro trade log, and then we'll finish our conversations. I did see more things come through. Reading, get the explanations. Okay, so may I ask why we see the opposite on the S&P 500? Same thing with the interest rates, but the S&P falls. I guess there are many more factors in the dynamic, and off topic maybe would be a good Q&A topic. Well, that's the correlation between the stock market and interest rates. There's a different correlation there than in the Forex market. So same concept of good and bad, up or down, but the correlation's a little bit different there. Great, thanks. Would you say that it would be a bad idea to paste those articles to AI and ask for key takeaways? I find reading in English about economics difficult to grasp. Yeah, sure, go for it. Yeah, whatever makes life easier for you. Yeah, usually those articles on investing.com I use that site because it's very short and sweet. Most of them are actually created from AI, so they kind of get right to the point. Some of them are a little bit longer, but whatever allows you to digest the information as quickly as possible. And again, the idea is if you do this consistently, because I knew nothing about fundamentals, right? Even in my stock investment days, I was a common sense stock investor. So although I was technically a fundamental trader, I didn't actually trade off of like news or anything like that. It was more of a common sense approach. So I was self-taught fundamental analysis, and it was simply just by making a habit of like reading a few articles a day. And I can tell you what, like the market on the technical side repeats itself. The market on the fundamental side repeats itself as well. There's only a few things that actually happen, right? Pretty much interest rates, again, are the biggest gear. They drive everything. And then there are a few announcements that have an effect on interest rates. So it only ends up being a handful of things that are actually important, aside from like tariffs was new, stuff like that. Like COVID was the first timer for me. So that's different stuff. But I think you'll find that you'll pick it up pretty quickly if you just make it a consistent habit, just like anything else. But yeah, S&P, same thing, just different type of relationship with interest rates. Real quick, FinViz has me looking like a trading guru. When you are reading news from investing.com, are you reading Forex tab or economic tab or what? Both. I enjoy both. If you want just, I'll load that site back up. Here's the fear and greed index, by the way. But both. It all depends on what you say. Understand, like I'm reading not just for, I'm not reading the news specifically for like Forex related things. Like I have a general interest in just what's happening out there. So I take in all other stuff as well. But you can do a few things here. So you go to this tab here at investing.com and you go to the top. You can look on the homepage right here, right? Usually kind of the main thing for the day will be right here. So you can look at that. If you want more, you can go to news. And I would say the two sections that I would go to are either you can go straight to currencies, which is going to be Forex, or you can go to latest or most popular, right? So let's just see what's on here today, right? Latest, again, and you can scroll through stock market. Maybe you don't care about that. Oh, CPI release, that could be important. So like, boom, let's click that and save that. AI valuation crash, it doesn't really, but Bank of England cut, okay. Like that could be important for Forex, right? And then just go down and kind of see what's important for you. And then same thing with Forex, you're going to get some of the same thing. Dollar edges up ahead of CPI release. All right, CPI, let's take that. Asia, Bank of Japan, okay, I can look at that. Russia, who cares about Russia? And then just go through and quickly read through the things that you want. So go through here, and again, okay, this is important. more U.S. labor inflation data due, right? Blah, 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 blah. Sterling, Bank of England decision, blah, 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 blah. That's important. Yen, okay. But that was nice and quick and simple. And then close it down. But yeah, go to the part that seems important to you. And many of them will tell you the same thing, but that just gives you kind of more, well, sometimes it gives you slightly different views, but it gives you more proof of what's going on. So yeah, play around with it. Find out, what do you think is relevant and what do you think is not relevant for it. I'll have to check the Monitor Screens podcast. I'm in the middle of revamping my setup. Yeah, it was a good one. It's picking up a lot of steam, mainly because I yelled at people for not using their phone, or for using their phone. Do you use ChatGPT or something like that for news info gathering? I do not personally, but I don't see a problem in doing it. I'm really new to the ChatGPT thing, right? I'm old and stuck in my ways, so I am about productivity and efficiency, but I also kind of like old school paths as well. So I don't personally use it to find news, but you certainly can. It doesn't matter how you find your news, just find the news, right? It's like if you're fishing for a meal, like I don't care what technique you use to catch the fish, just catch the fish. You can use a net, you can use a fishing rod, you can jump in and use your hands, you can use a spear. It doesn't really matter, right? Find the method that is best for you and use that method, because all the news is going to be the same no matter what. You're not going to get something different on Google than you would get on investing.com, right? If something is important in the market, guess what? It's going to be talked about all over the place. And if it's factual news, it should be the same facts as well. So yeah, go with whatever you want. ChatGPT can be biased. That is another thing. That is, not to get into a whole AI conversation. So, you still got to be careful with AI. AI is great, but it is still also a gathering of things that are out there. So there are many unfactually correct things out there that are very popular that it may gather and give you false information. So you got to be very careful with that. But I mean, that's part of the deal. But yeah, use whatever the hell you want. It doesn't matter. Thanks. I'll start doing this in my daily routine. By the way, you can just press the mouse wheel to open up sites and links and new tabs. All right. Any other questions about news? Hope you enjoyed the channel. Check out the short section here. Lots of daily tips uploaded on a regular basis to help push you along the path of becoming a consistently profitable trader. And remember, as we get closer to the holidays, don't try to do anything dumb in the market, trying to make up for all the bad things you did during the year. Rather, use this as a time of education and preparation for 2026. All right. Until next time, plan your trade, trade your plan. Take care.